and welcome to the Sovereign Stylist Be Accountable. I am your host, LeeAnn Miley, and then we have Rose Linder, who was with us, and she is our accountant. Today, we are going to go over business entities and how to file for taxes. But before we do that, go ahead and give us a like and then subscribe so you don't miss out on any of the information that we bring to you guys. So Rose, let's go ahead and just get started then, because we have a lot to go over.
A little bit, yeah. Hi, my name is Rose Linder, and I am an accountant. I'm going to share with you today a little graphic that I created. It's kind of a little cheat sheet, and then we're going to go over it, and I'm going to kind of give a little bit more in-depth information. So here we go. So in this screen, we can see that there are 5 different types of business entities. Now, this is for simplicity's sake. You can do hybrids, all kinds of crazy stuff. That would be, you definitely want to, check with the tax professional on that. So first thing is sole proprietorship. This is just you doing your business, and then everything gets put onto like a Schedule C, and there are absolutely no dues, fees, subscriptions, any of that kind of stuff with a sole proprietorship. It is just you. But there is also no separation between you and your business. So the problem with that can be that if you do something wrong, they can sue you, and they can either take your business assets or your personal assets, both, because there's no separation. It's really important for some people to have that separation. The taxation is a flow-through entity, which means you basically have to pay self-employment tax, and then you have to pay income tax on top of it. That might be okay for you if you're not earning a lot of money. If you're earning a lot of money, chances are you're going to want to move into a different type, and you want to check with your accountant on when that is. So a general partnership, that is where one or more people have equal stakes in a company, and there's also no dues or fees or anything like that in terms of like your business entity needing to be registered with the state or things like that. There's also no separation. All partners are equally responsible for any debts incurred by the business. So if you and Joe both own half of a business and Joe backs into a $70,000 truck, you are both on the hook for that. So it's really important that you understand when you have a general partnership that can happen. The taxation is also a flow through. You would each take half of either the gain or the loss from the business. And you are liable for your personal assets. So let's say Joe doesn't own a house or a boat or a car, and the business loses $100,000 and you own a property, you're on the hook. And so it's really important to know that before you get into some kind of a partnership agreement, because there's other partnership agreements that you can do where you can protect yourself a little bit better. Now, a C corporation is what we think of when we think of the large corporations. And the benefits of that is that there's a separation of financial obligation between the business and the owners. So the owners, in the case of like a stock traded company like Target or Walmart or Amazon, is that you are on the hook for whatever money you invested. If the stock crashes, you lost that money. So there's a limit to how much you can lose there, which is really nice. The problem with that is double taxation. And what we mean by that when we say that is that the business will pay taxes. They will pay profit taxes. And then when you receive dividends or you sell your stock, you will then pay income tax on it as well. We call it a passive income tax, which is around 10% if you've had it longer than a year. Again, check with your accountant before you do any of that stuff. But the bottom line is you pay tax twice on that, but you don't pay self-employment tax. There is the separation. An S corporation is a little bit more tricky. And the reason that some people love S corporations is because they're smaller. It's less than 100 shareholders, okay? But you can change the different kinds of stock you can get. So you can get voting or non-voting, or you can get, it gets really detailed. And if this is an important thing for your business, or it makes sense for you to do this, then I would absolutely choose this type of a corporation. It does have a little bit better of the flow through, including only the stock owners get taxed. So if you have 5% in the company, you're going to pay income on 5%, or you're going to pay tax on 5% of its income, because it's going to flow. It's almost like a flow through, but not quite. Again, there is that separation, which is really nice. So the business tanks, you're only out the money that you put in. The difference with an S corporation is every owner who actually works in the business and officers of the business must take a reasonable salary. And that is going to be determined by the IRS. Again, check with your accountant for whatever number that is for you. And then the last one we have is the limited liability company, which is really popular these days because it's got all the benefits of a sole proprietorship without any of the drawbacks. Well, without most of the drawbacks, I should say. So you will have to pay to register your business with the state, and every year you have to pay a licensing fee or whatever it is. And then, but you do also get that separation. So say the business tanks, you do something like as an accountant, let's say I make a really huge mistake and I cost a client $1 million. I can hand him the business, or I can, write an IOU or something, but he can't take my house. So that's really important to, one, make sure you always have insurance, and two, it keeps you from being on the hook financially for some of those, reasonable errors that are mistakes. I mean, obviously, none of those are going to save you from malicious deeds. But the taxation, unfortunately, though, is also a follow-through, a flow-through, meaning you pay income tax and you pay self-employment tax, which is Social Security and Medicare. And then again, the limit of your liability is going to be whatever you put into the business, including any equipment you've bought for it, things like that. So that's just a quick rundown on business entities. And LeeAnn, could you think of any questions that maybe people would have?
So an LLC is kind of something that you add on, right?
No, it is a legal business entity of its own. So you would register your business with the state. It would have its own name, its own, I always recommend getting an EIN, even though you may not have employees, because it keeps that separation. Also, having your own bank account for your business is really critical because, audit time, you want to make sure that all of this stuff is business and all of this stuff is personal, and you can clearly see the difference.
So like you were saying with the EIN, really, that's kind of like having a social security number for your business.
That is exactly what it is. It's creating a separate entity legal-wise. Mm-hmm.
Yeah. So instead of having your social security number out there even more places, you can get an EIN. It's really simple. You go to the IRS website. We'll post it in the comments. You go to the website, you answer some questions. In about 10 minutes, you have your EIN.
And I just want to point out that an EIN is free. Now, registering your LLC with whatever state you live in is going to cost you a fee, and that varies by state. So I really don't know.
Yes.
Here in Wisconsin, I think it was like $250 or $275. I heard something like Texas is $600. Like, it just really depends on where you live.
And I've heard like I think maybe Nevada or something was like 50 something. Nebraska, we're like around $200, $250. So it really varies.
It does a lot.
The requirements are different too. Like here in Nebraska, you pretty much you have to have a lawyer draw up the paperwork. So you're out those fees too. But at the same time, let's say a client nobody ever means to, but you accidentally burn a client doing curling their hair, or you have a chemical burn. We don't plan on those things, but you never know who's going to come back after you. And you don't have that LLC, they're going to come after your house, your car, your everything.
You are on the hook financially if the courts decide that you owe money for that. This is another really good time to point out that you can get business liability insurance, again, for mistakes, things like that, not malicious deeds. But if you make an honest mistake and you get sued by a customer and they win, your insurance company will pay that. So you really need to kind of weigh whether or not, it just depends on what treatments you're doing too. If you're not doing anything where you're worried about burning somebody, or, you're only doing cuts and colors, no court is going to award $50,000 if you accidentally snip somebody's ears with your scissors. I'm sorry, they're just not. But if you, when you start getting into hair coloring and waxing and all that kind of stuff, you might want to consider getting some kind of liability insurance.
Well, the other thing to bring up is like the fees that you pay to become like an LLC or to like become actually incorporated with your state, and then like your insurance amount and stuff like that. Those are all tax deductible, right?
Yeah, those are expensed. So they come right off your top line. And so you wouldn't pay tax on any earnings that you use to pay for those services. Just like your electricity, your chair rent, your business, your mortgage, that kind of stuff, that's all included in expenses. And I don't want you to feel like you have to marry one of these business entities. If you don't like it, or you grow and you're like, oh my gosh, I've got all of this potential, but I need investors. So I'm going to start, I'm going to change from an LLC into an S Corp or a C Corp so I can get investors. You're totally able to do that. That I would hire an attorney to do, just because it, cover your butt, right? So that's absolutely something you can do.
The other thing is that was brought up in the group is that, like, if you're an S Corp, so if you're a sole proprietor, you pretty much kind of pay yourself the way that you feel. Like, whether you're taking a percentage off of your income after expenses are taken care of. But if you're an S Corp, don't you pay yourself like an employee?
Yeah, so part of the S Corp is if you are a physical worker in the business as well as the owner, you have to pay yourself a reasonable salary. So you would have to do a little research in your area to find out how much somebody in that position would make. So let's say you own a 20-chair salon, you have 22 employees, and your gross is $5 million a year. You're going to look up how much a salary a company that size would pay a general manager or something like that, right? If that's the role that you have in the business. Now, if you're just popping in once a week just to make sure that the place looks clean and people are actually there and the store is open, you don't have to pay yourself anything. Again, it has to do with your level of involvement in the business. Now, with a sole proprietorship or an LLC, every dime that you make that is not expensed flows through to your income, and you will pay tax on it regardless of whether or not you take it out of the business. Now, the good news is you can write off half of that Social Security and Medicare tax, right around 6.5% of that self-employment. You can write off as a business expense, because if you were being paid as an employee, the employer would pay that portion.
Another thing is because our group has so many independent stylists. So if you're a booth renter and you're making some good money, you might want to look into being an S Corp, and then you would then treat yourself like you were your own employee.
Right. Financially, you would pay yourself a salary or an hourly wage, whatever you felt was appropriate. And when we get into appropriateness, you're not going to pay a stylist who charges $25 a haircut, $80,000 a year. But with an S Corp, you have to pay yourself a reasonable salary, even if the business is not making money. So that's kind of the caveat that you have to look at, that, the business can lose money, but you still have to pay yourself. So you can really mess yourself up pretty quick if you're not careful with that one.
Okay. So, we've kind of gone over a lot in a short amount of time because we both are fast talkers.
We are.
If you have any questions, make sure you drop them in the comments, because Rose and I and the rest of my team will be watching to make sure. That's one of the things with the Sovereign Stylist is we always want to make sure that your questions get answered. And Rose kind of has another little offer too that she's going to extend to our group. Did you want to mention that?
Sure. So if you really are confused about this, you need a little advice, anything to do with accounting or your booking or whatever, you can shoot me a little message. We'll get you booked for a free 15-minute call just to kind of go over whatever you're confused about. Because sometimes it's this one-on-one stuff where people are shy and not really wanting to, say something in front of the group. They're worried they're going to look stupid or whatever. I don't want anybody to feel that way. So you can shoot me a message. I'm more than happy to book a quick call with you, and then we can go over whatever concerns you have.
We will also put the graphic in the comments so you guys can check that out too, if that helps you out. But as always, make sure you ask questions, because that's what we're here for to create successful stylists and salon owners and barbers. I know we have some barbers in the group. Make sure that you give us a like and a follow, so that you can check out the next time that Rose and I are on with some more accounting advice. And thank you very much, Rose.
Thank you. We'll see you next time.